Good afternoon, ladies and gentlemen, and welcome back to MicroStrategy Mondays. My name is Anders. I've got your favorite Quanda back, Jeff Walton here, Punter Jeff, one of the quant fathers, I would say, of MicroStrategy content. There's a couple of labels there for you. All good.
Quant father.
I every Monday like to do MicroStrategy Monday, where I get together what I consider the smartest brains in this space when it comes to looking at MicroStrategy from an investor's perspective. It's an area I find extremely interesting, and I have got myself a little skin in the game, which usually is good for finding something more interesting. I got a bunch of stuff, Jeff, that I've written down, areas that I'd love to go through with you and hear your opinion on. I could top of the list, just share them with you. Like I hear on MSTR, MSTR True North, you're going through a bit of an agenda, and then we can plug and play. But
Sounds great.
what I'd love to hear you about is generally, I think people underestimate or forget that MicroStrategy, it's basically their increasing ability to buy Bitcoin when the price of Bitcoin pops. So that's one thing I'd love to touch upon, because people forget that, I think. Also, it to me seems that what we're dealing with here, or MicroStrategy is dealing with, is it's increasing returns in the nominal amount of Bitcoin. That's another thing I want to touch on. Also, on the last show with Dan and Tim, I did some napkin math on the growth of Bitcoin over the last 12 months, which was 2.5x, and MicroStrategy was around 8.5x. And these are just ballpark figures, but it tells us something about how MicroStrategy develops in price over time. I think when Saylor talks about MicroStrategy being able to move 1.5x of Bitcoin, that it is important to understand that he's not talking about over the next 30 years. That's something that happens maybe on a 3 to 6 months period if we look at last year, and future may not match the past and everything, but if it happens several times a year, then the power of compound interest is mind-blowing when you add 10 years to that. Of that. And then there's the preferred stocks, of course, which I know you told me in the green room that you've looked into. I'm very happy for that, because that is much more of your area than mine. And lastly, also, I do want to start with saying I like to look at MicroStrategy, the market cap, the price of MicroStrategy in terms of the Bitcoin price. And if you look at fully diluted stock of MicroStrategy, multiplied by the price of the stock, and then divided by the price of Bitcoin, then the way I see it right now, and I'm happy to stand corrected or hear your input, is that the market cap of MicroStrategy right now is 980,000 Bitcoin, ballpark. For me, that's interesting because I have my mind on how many Bitcoin I do believe MicroStrategy is able to accumulate over time. And for me, that means still MicroStrategy is quite cheap, in my opinion. But we can take it from the should we start? Do you want to start with preferred stock?
I do.
Okay, let's do it, 'cause that's the new thing today.
It's the new thing, and it's one of these. Man, this stock is moving at breakneck speed. It's every day. You show up. I show up to my office, and it's I pop open my Twitter feed, and there's something else. And today it was MicroStrategy bought another 10,000 Bitcoin, and we see this preferred stock offering with some additional details. A video presentation from Saylor, which I think is very good once again, and also outlining that I think that we'll find out the pricing of this preferred stock by Thursday close of business, which will be interesting to see how this plays out. But I've just done a little bit of research on perpetual preferred stock. So thinking about structure of corporate investment vehicles, right? You've got senior debt, right? So if you where am I going with this? Basically, if there were to be a bankruptcy proceeding, different levels of holdings have different priority over who gets the assets.
Right.
So when you think about senior secured debt, like that has the first, or senior unsecured debt. I don't think they have any secured debt left. That is the first priority in any sort of bankruptcy proceeding. So basically, it goes down the list. So you've got senior debt, and then you've got preferred shares, and then you've got common stock. And it goes from most risky to least risky. And each one of those different tranches of risk has different, return potential. So it's like a risk return potentials. So preferred stock is in between. It sits in between common stock and debt. Basically, it's effectively a blend between the two, where you've got an interest rate that's paying out over time, and it's effectively a call option with zero horizon. So there's no specific end date. That being said, the preferred stock does not have voting rights, but it is senior to common stock. So I'm really curious to see how this is priced on Thursdays. Once we have some pricing information, we'll play with it, right? Like we'll have a lot more information on who's potentially buying this, how are they buying it, what does it look like, how do you contemplate it? And in my analysis of wondering who's purchasing this preferred stock, I looked at something that I'm really that I care about a lot is ETFs. So there are preferred stock ETFs. Believe it or not. Guess who runs the largest preferred stock ETF in the world?
Well, BlackRock? No.
BlackRock.
BlackRock. There you go.
It's BlackRock. BlackRock runs the largest preferred stock ETF in the world, and there's actually dozens. I just pulled up a list. You could Google preferred stock ETFs, and in this, I just looked at the iShares. The ticker for the BlackRock preferred share ETF is PFF. And PFF, it has, what do they have? Assets under management of, I think it's 14.7 billion, 14.7 billion. 14.7 billion. So it's pretty large. It's smaller in the relative scheme of things of total size. But this is a pool of capital, right? Like you think about who invests in these types of vehicles. Again, we're thinking about pools of capital like insurance companies, pension funds, wealth managers that are looking to diversify their asset classes. And if you have a pool of diversified preferred stock, that preferred stock is less risky than any common stock, right? So just looking at the assets held in this preferred stock fund, top 3 holdings: Boeing, Wells Fargo, Citigroup, Bank of America, Apollo Global Management. So these are that I think this fund holds hundreds of preferred stocks. And so you think about this being another pool of capital. You could tap this pool of capital without necessarily, touching a retail sector or, going to do a private placement. There's going to be capital that just wants to add this to an ETF. And I think MicroStrategy is looking at raising 250 million right off the bat, part of, I think, 2 billion on the horizon. But that 250 million, I think, could get eaten up probably just by ETFs without even considering other retail investors or home offices or wealth managers purchasing this stock. So it's another vector of this ETF tackling ETFs, where this capital is looking for ways to get into different markets.
Yeah, it's beautiful how Saylor has incorporated this nuclear reactor of Bitcoin into MicroStrategy, and now we're seeing him looking at the different financial markets that are worth billions and trillions of dollars. And then he's saying, these guys need a product, we'll make something for them. The convertible bonds, these guys need a product, the preferred stock, we'll make a product for them. And probably like the converts, he'll end up having the best performing preferred stock. Yeah, that's easy to imagine, right?
Yeah, and that's when I looked at this. I looked at Boeing being the largest holding in this preferred stock ETF. and then start to think, okay, well, if this becomes the best performing preferred stock in this ETF, we're going to start to see other different vehicles that are slung off of this this type of structure. So, or we're going to start to see other vehicles that are stood up to capture preferred stock for Bitcoin treasury companies. Very similar to what we saw with convertible bond ETF for Bitcoin-backed convertible bond ETF. We're going to see Bitcoin-backed preferred stock ETF, guaranteed. It's going to take a while, but
Yeah.
We'll see how this comes to market. We'll see what the market reaction's like. We'll see if it gets upsized. We'll look at what the pricing is like, and then we're going to see new funds that are going to be created and developed that are going to capture this this tranche of risk.
Absolutely. I think you what you referred to there is Vivek Ramaswamy that is doing as I understand an ETF for the preferred stock not preferred, the convertible bonds, right? And even though the 14 billion for this doesn't sound like a lot of money in the grand scheme of things, there might not. I'm expecting that there's also a lot less preferred stock out there, so Saylor could still probably get a decent chunk of that, I'm guessing. So and what's worth noting, I think, is for people to be aware that this is way more accretive than the ATM or the convertible bonds. It's super accretive. They will get a dividend, but the conversion to the stock is way higher. Is that correct?
Yeah, conversion's way higher. It's perpetual preferred, so there is no end date. Additionally, the buyers, right? If we're thinking that the buyers might be ETF folks, it's not going to be the convertible arb buyers of that buy the convertible debt, right? The folks that buy the convertible debt, they're shorting 70% of the position right away, which has a really big impact on price. Whereas these buyers that may be buying this may just be buying it for that exposure, for that long horizon and the perpetual dividend until it's called or converted into equity, in which case, yeah, I mean, and these buyers are different.
Right. Well, that's it's super exciting. I think we all we knew it was coming. He spoke about it, and then we saw it today, and it is good to see it now live and exciting. Thursday, what they're gonna what the pricing is gonna be like. Anything else you want to touch upon on the preferred stock, or
No, that's it for right now. I think okay. I want to see how this develops over time. I want to see how it's priced and how it comes to market. And I think somebody asked in here, are they going to be available to public? I think it's going to be tradable in the secondary market. It sounds like Saylor will have access to the ATM with this preferred stock as well. So should they be in a position to issue more preferred shares via ATM, they'll be able to do that as well. So tapping another pool of capital, adding to more asymmetric information in the entire market. And I think if I heard some buzz earlier today that if you wanted access to this preferred stock or the initial offering, I think you have to have over $500,000 of holdings in Fidelity or whoever your brokerage account is to access this stuff. So I think yeah, I think some people have access to it, but not everybody. It's not for everybody right away.
Right, but don't we agree that at the end of the day, like, because I see people speculating, is this something you want to buy as a retail investor? But don't we agree that all these different products that Saylor is now tailoring to the different financial markets is a matter of giving them some of the upside, but stripping away the volatility, which then all comes back to the benefit of the MicroStrategy shareholder. So the MicroStrategy shareholder, as a private investor, is where you can expect to get a better performance if you believe in Bitcoin, right?
Right.
Yeah. Okay.
I think you nailed it. And Victor says in here, speculating on $250 million seems it's too small to mess with. $250 million is really, in my opinion, proof of concept, but you also think it's what is it, 3 times larger than the Semler Scientific's recent convertible debt offering? I know the scale is different, but you think about like $250 million is still $250 million of Bitcoin accreted to balance sheet. And that can grow substantially depending on cash flow potential in the future, which, we could get into that SAB 121, SAB 122, and banks being able to custody Bitcoin and how that really changes the game too.
Yeah, dude, any topic that you think is important to discuss, you just go for it. So if we've kind of covered that now, I want to go back to what I mentioned at the beginning, and that is the fact that like there's been weeks where the price of Bitcoin has been stagnant, but Saylor has still been able to buy. Sometimes it's 1,000 Bitcoin, sometimes it's 10,000 Bitcoin. But I think it's worth to remind people, and correct me if you disagree, that when the price of Bitcoin pumps, moves to the upside, it opens up all the tools for MicroStrategy to actually buy a lot more Bitcoin. So it's especially when Bitcoin is moving up that we can expect the bigger buys. Would you agree with that?
Partially. I mean, that's where the ATM,
Okay.
that's where the ATM can be most powerful, right? Like if there's strong, significant movement to the upside, there could be, you could see this spread in premium between, underlying net asset value and the actual holding of the Bitcoin in the market cap. So we can see that premium spread increase rapidly in movements to the upside. So the ATM can be powerful there, but keep in mind the ATM, there's only $4.5 billion left of the ATM. So 16, $17 billion of ATM has been used in 50 days, right? Like it's a tremendous amount of capital that's raised in just an incredibly short time horizon, which is now permanent capital that's held on the balance sheet moving forward into perpetuity. So in retrospect, thinking about this $42 billion capital plan, I think they're running it exactly how you would expect them to run it, because you'd want to have a really strong capital base. You want to use the ATM first, so you have the strong balance sheet to leverage against, right? So to put it in perspective, if they would have issued $10 billion of convertible debt right away, they would have had more debt on their balance sheet than assets on their balance sheet. And it would have flipped, the narrative would be significantly different, right? But now that they have so much Bitcoin on their balance sheet and so little debt, and their leverage is actually so low, they have, as the price of Bitcoin moves, their ability to leverage the balance sheet becomes exponential, right? As the price of Bitcoin rises, their ability to leverage rises exponentially. So, and Saylor even kind of alluded to this in the preferred presentation, that video that he put out today, just talking about leverage of the balance sheet. So, I think we're getting close to the end of the ATM here in short order. And I wouldn't be surprised if we see $5 to $10 billion of convertible debt are issued in the next 4 to 8 weeks, probably.
Yeah, Saylor has hinted at it now several times, directly said that Q1 is the time to lever up.
Yep.
So it seems what's about to happen. I think that's on the short term also is really good for the share price. And that's why I'm personally super bullish for Q1. And honestly, until sometime near the end of the year, I think it'll be wildly exciting to watch both Bitcoin and the price of MicroStrategy.
And as they get the convertible debt in the door, right? So like, let's just say you issue the debt, they get cash. So let's just say you've got $5 billion of buying Bitcoin. That's going to put pressure on Bitcoin, right? Or the price of Bitcoin is going to go up. And as that price pressure on Bitcoin pushes the price of Bitcoin up, that actually improves the leverage ratio at the same time. Because all of the Bitcoin held on balance sheet is also appreciating at the same time. And at a faster rate than the debt is increasing. And that's, again, where this kind of Bitcoin yield comes into play, where they're able to add more Bitcoin to the balance sheet than shares that they're adding, which is just going to create more chaos, right? Like this stock is chaotic by design. Saylor is making it chaotic by design. The more asymmetric information there is, the more volatility there is. The more confusion there is, the more volatility there is. Like the more people that are betting against this creates more volatility. And everybody's trading this in all directions, and everybody thinks they're right. And we're going to see this, like, there's going to be a higher amplitude of peaks and troughs. I think we're going to see this similar to what we saw in November. I think we're going to see a higher peak, but it's going to last for, a week. And then there's going to be, hundreds of millions of dollars that are short on MicroStrategy because they think it's overvalued. And then the narrative is going to flip, then it's going to go the opposite way. And you're going to see people trading the opposite direction on all this stuff. And people can make trades over different horizons. Like there's so many investment vehicles to trade this thing, right? Like the fact that the option market exists with different horizons means you can take different strategies at different horizons on different volatilities. And now you introduce new vehicles like preferred stock and convertible debt, and it creates just more and more chaos to the whole thing. So it's just going to get crazier. I like people, we haven't even experienced mania. If you go look at GM, just Google search trends like GME versus MicroStrategy, people are still searching GameStop more than MicroStrategy today for the last
wild
6 months. And we're talking like, what is GameStop? Like I don't know, $8 billion company, $10 billion company versus a company that's 10 times the size with the strongest money that the world has ever seen, and more of it than any other company by, like 10x. So yeah, I mean, it's, I feel really comfortable holding MicroStrategy because it's got really, really good underlying fundamentals. Like I go to sleep well at night because it's got really good underlying fundamentals. Whereas like with GameStop trade, which I was part of, I mean, I held GameStop for 2 weeks, and my brain was a complete nightmare because I was like, what am I doing? What is this thing? Like watching the whole thing play out. So yeah, I'm bullish 25, and the road is just wide open for innovation with a new political regime, SAB 121 being repealed, potentially.
Do you want to touch upon that? Do you want to touch upon that a little bit?
Yeah, I really do, because I think it's very underappreciated. It's the biggest thing. Yeah, it's huge. It's probably the biggest thing of this whole like political regime change is this SAB 121 being repealed and banks being able to custody Bitcoin. And I'm just going to give you an example from my vantage of why this is really important. Thinking about insurance companies, because this is a lens that I look through. Let's imagine you've got an insurance company that banks with Wells Fargo. Let's call it we'll call it a reinsurance company. We'll call it Jeffrey. Okay. And let's say they've got $100 million of assets, 50 million in non-Bitcoin and 50 million in Bitcoin. Historically, if this company were to perform like a reinsurance transaction, they would get a letter of credit from the bank, and the bank would say, hey, insurance company that's taking on this risk, this reinsurance company is good for it. Like you'll get a letter of credit, and it says, okay, they've got enough capital in the bank, they bank with us, and they'll get a letter of credit. If you have a loss, that's okay. Like the company will pay you. And if they don't pay you, it's on the bank to pay you. So that's what the letter of credit is there for. And now, prior to SAB 121 being repealed, that $50 million would be the only assets that I would be able to borrow or lend against. Now, if the bank can also hold the $50 million of Bitcoin, I may now be able to get a $100 million letter of credit instead of a $50 million letter of credit. And that fundamentally changes like how that capital is lent out in the marketplace. So that's new lending capital that's going to infiltrate all avenues of the capital world in significant scale, because these banking folks that have large capital, or companies with lots of capital, utilize this infrastructure all the time. This kind of letter of credit infrastructure all the time. I mean, that's how they put capital at risk. The money never actually moves. It stays in the bank. But you create these kind of paper contracts on the outside. And if things go south, then the bank pays the transaction kind of goes through. So, yeah, I think that's going to change drastically. We're going to see this like percolate, but it's not going to make headlines. It's going to happen all behind the scenes, and nobody's really going to know what's going on here. But like, this is a really, really, really big deal.
So the way I'm reading what you're saying is that essentially it significantly increases the incentive to hold Bitcoin as one of these financial institutions that want to have their bank give a letter of credit, because they could believe in Bitcoin and see the upside, but we don't want to hold it because it doesn't help us get a letter of credit. But now it does. So let's get the upside of owning it, as well as we can use it as collateral. It increases the incentive for Bitcoin amongst the big money, like big time, the way as I understand what you're saying.
And Bitcoin will effectively eat all of traditional finance from the inside out because of this. Because what will happen is, what's up, Ben? He's here. Nice. What will happen is you're going to have this, you're going to have these companies that are adopting this Bitcoin Treasury strategy, or you've got Bitcoin on your balance sheet, and they're going to use their letter of credit to, put their capital at risk, but they're going to leverage their entire balance sheet, and they may continue to, funnel that additional risk capital back into Bitcoin to put on their balance sheet. So I'm very bullish for what this looks like in the future. It's going to be very quiet. Nobody's really going to see it happening, I don't think. It will obviously make headline news when deals are done, but I think it's going to be relatively quiet for the first 12 months, probably.
Yeah, it's people, I guess, in general, we tend to overestimate the short term and completely underestimate how the medium long term things like this can completely revolutionize.
Yeah,
we've got Ben in the house. Awesome. Glad you could make a little time. I know you were super busy today, Ben, but good to see you here, man.
How Absolutely. Are you? I'm good. Yeah, it's been a bit of a wild day, so sorry I couldn't make it earlier, but I'm here now. So here we go. But I'm mostly here. I got to know, what does Jeff think about the preferred offering? Before I go in and start doing my own rambling thing, I got to know what the expert in the house thinks. So.
Expert. I feel like expert to expert. I did a little bit of research before this, and the BlackRock owns and performs the largest preferred and income securities ETF in the market. They've got 14.7 billion in assets under management, and there's 20 plus preferred stock ETFs out there in the market. So I wouldn't be surprised if BlackRock is one of the big buyers of this preferred ETF, or the preferred shares for MicroStrategy, and that funnels its way into the preferred and income securities ETF, where they get fees. So, but go ahead. I want to hear your thoughts. I mean, you've got some perspective on it.
So I'm starting to really like it. So, it's always interesting when it first comes out. I mean, I wasn't surprised. I was surprised at the size, right? Because originally
smaller,
the messaging was 2 billion. And so this initial, and I'm not going to be at all surprised when it's bigger than 250 by the time they finalize this. I think this is one of those where you're in your first offering and you're trying to feel out the demand in the market. And so you start somewhere very easily accessible, particularly because they priced it so retail could participate. And I think that's kind of a big deal for an offering like this, to finally have the first chance for retail participation in a fixed income product that they're offering, because they've never had that before. Everyone always had to be a 144A. So that was interesting. I was originally thinking it was going to be geared only towards essentially the big institutions, the pensions, the endowments, the insurance companies, the ETF buyers. So that was why I initially thought that they'd price it at 1,000, but they priced it at 100. So that was good to see. And from what I'm hearing, retail can participate. It's just a $25,000 is going to be the amount that you have to put in to get an initial allocation. So that'll be good. That'll change it for people. But what I'm starting to look at that I kind of like here is it gives an immense amount of optionality moving into the future. So they're doing this initial offering, 250 million, whatever it ends up being. It's 8%. That's surprising a lot of people, but that was pretty much exactly what I thought it was going to be. I said 7 to 8% was my target range on this one. But they're essentially raising the money at a 200% premium right now. And I think that's a really big deal when you think about the initial accretion to the Bitcoin yield metric, right? It's way more accretive, particularly initially, than any of the converts are, right? So the highest convert we've seen so far, I think, was 55% premium. This is 200, but you've got the caveat of there's a little bit of time that has to be considered in terms of the funding of the dividend payments. So the 200's not a locked in stone yield because that's going to erode a little bit over time as they use things like the common stock ATM in order to fund the dividend payments. You have a question, Jeff?
Yeah, 200%. Where are you getting the 200% from?
Yeah, so you got to look at it a little different because the pricing's not one-to-one with the stock, right? So the way I look at it is they're trying to raise $250 million.
Yep.
Each share is 1/10 of a common. So it's 2.5 million shares, which means there's 250,000 common shares tied to it.
Yep.
So the offering is essentially raising capital at $1,000 valuation in common terms.
Yep.
And right now it's trading at 340 or whatever. So 1,000 divided by 340 tells you what the premium is that they're raising this capital at.
Okay, got it.
Yep. So that's all good, right? I think it's very cool that they're raising money at that high of a premium. It's got no debt associated with it. It's very much structured as equity, which we talked about quite a bit last week or the week before, whenever that was. So this is equity on the balance sheet that they're raising now. But one of the most important things about this is that this offering allows for them to file another S3, and they can essentially open up an ATM on the preferred side of the house. Now, initially, that doesn't sound like a big deal to people, but when you think about looking forward,
to buy Bitcoin when the price of Bitcoin.
What am I?
No, that was
okay.
That was
yeah, no, all good.
Carry on.
Yep. Yeah. So now they've got a second ATM open, right? Which is going to freak people out initially. They're going to go, "Oh my God, it's over," But think about it differently. You've now got two ATM vehicles, one for Class A common, one for preferred, right? And the S3, I think, to open an ATM would come after this offering closes. I don't think it's going to come along with the closing. I'm guessing it's after. But so now they open an S3 and they say, we're going to raise $1 billion, right? With an ATM offering on the preferred. It starts out a little slow for sure because they've got to hit certain volume metrics to be able to tap the preferred market with an ATM. But what it essentially allows them to do is stop using the Class A common ATM as their primary vehicle for raising capital, and they can go to the much more accretive preferred ATM to raise the capital, and they'd only have to use the Class A common ATM to pay the dividends, right? So they'd raise the cash for the dividend payments using the traditional ATM, and they would raise the capital to buy Bitcoin with the preferred ATM at a 200% premium, or maybe even a much higher premium, right? Because when they issue it as an ATM, it doesn't mean that they're issuing it at the $100 value. It's going to be whatever the market value is. So if the preferreds are trading at 150 or 175, right, they'll be able to raise capital higher. So it's going to be pretty cool, I think, moving forward. And I think that all the people screaming about the ATMs should be jumping for joy because this new structure allows them to stop relying on that side of the equity equation. They can use a much more accretive equity equation that has far fewer shares of common stock. Plus, they get the benefit of stretching out the issuance of the common shares long into the future because they don't need that many of them. So think about the dividend on this ATM or on this preferred offering. It's what, $20 million a year? If it's 250 million, if it's higher, it's higher. But that's like 2 minutes of ATM usage. That's like nothing.
So people are going to absolutely hate that.
Well,
maybe not MicroStrategy holders, but the bears
Oh, sure. Yeah.
They are going to make so much noise about this.
But that's the best thing in the world.
It's going to be
right?
the most
We need
hated rally of all
massive,
time.
massive disagreement here. I don't want people to agree on MicroStrategy.
Oh God.
I almost don't want to try to convince people about MicroStrategy because I want the range to be, you've got the bears that say this thing's a Ponzi going to zero. And then I want the gladiators saying it's going to be $30,000 a share. I want that to be the range because that's what creates your wide volatility swings.
Yeah.
You have to not have agreement on the value of something to get the volatility. And that's
Right.
what it has. And that's what Bitcoin has. That's why Bitcoin's so volatile. Nobody can agree on whether it should be $1 million a Bitcoin or $0 a Bitcoin. And because it's got a wide range of what people think it's worth,
Yeah.
it creates those trading opportunities for people to try to drive it back to where they think it's worth. So I want a wide range here. So I don't care if the bears don't particularly like it.
It's more
because
chaos. It's just more
exactly.
chaos.
It's going to introduce more volatility into the equity, and that's going to make it a more valuable trading instrument. It's going to become more liquid to trade. And I think that this offering is going to attract a huge new pool of investors because this is a true fixed income product to the point where MicroStrategy didn't even put in a conversion trigger for themselves, right? They can't convert this. There's like two ways that they can convert any of it. One is if it gets down to 25. So if enough people convert that it gets down to 25% of the initial outstanding. So 62.5 million, something like that. So if it gets down to 62.5 million, they can basically do a cleanup saying we're going to call all the rest of it and that gets to convert. Or if there's some massive tax law change that changes the tax treatments for the preferreds and it causes all these issues, then they can call. But there's like no triggers for them in this. There's no 130% clause. So, this one's a true fixed income instrument for people that want the income side of things and stability, right? That strike price being $1,000 strike price, essentially, that's so deep out of the money that this thing's going to operate like a pure fixed income instrument, which is going to attract that type of capital to it. And early on, while it's trading, around par, whatever it trades at, you're getting that 8% yield. As it gets closer, say the common goes to 1,000, the preferred goes to, 200 or whatever it goes to. Now your yield's down to, 4% or whatever the preferred's trading at. I'm just making an example here. But so I think it opens up far more optionality than people are giving it credit for. They're viewing it as, it's just another avenue for dilution. Yeah, but it's getting rid of the one you hate. So it's far more accretive. You're going to get way more Bitcoin per share this way. It's going to be far more accretive than they can even get on a 0% convertible note because that has a cap to it, right? So it's a very unique instrument to bring to the market that might even have them slow down reliance on converts into the future, right? They might not even need them, depending on what the demand is in the preferred. Obviously, I don't know, but we'll have to see. They gotta tease that out here and figure out what that demand looks like. But I think it's a fascinating offering that offers huge amounts of flexibility going into the future. So I think it's good. And the cost of this is 8%, which is not very significant when you think through how high the accretion is and the fact that they get to defer so much of the common stock issuance way out into the future on this. It's a good product. I mean, if you're focusing on Bitcoin per share and Bitcoin yield and you want them to keep going Bitcoin, it looks like a home run product.
And you're likely not going to have ARB desks. Like, what's your opinion on ARB buyers? Like, these are probably not ARB buyers,
no.
Right?
It's possible because there is the conversion component to it, but it's not nearly as attractive as the converts are because it's not going to move that much because that call option's so far out of the money. Like the ARB guys, if you're trying to press them and see how far you can get away with 0% converts where it still makes sense to them, you're probably capping out at like 100% premium would be like a home run offering. And before it's not going to make any sense to them. Right. Yeah. And it's still probably less accretive than this preferred, even with the 8%. So I don't think you're going to get the gamma traders here. It doesn't really make sense for their style. Maybe you get a few, but nothing like you're used to. You're going to get people that want that fixed income payment, right? They're going to want that 8%. And they're holding a call option for MicroStrategy for well out in the future. So they get to collect their 8% and maybe they get an upside pop on this and the preferreds double over time. And, they get another bumping their earnings. But in the meantime, they just collect fixed income, fixed income payments, and they're happy. So I think it taps into an entire new buyer pool that they probably weren't going to get anywhere else. And it's the first time that retail is going to get involved in this. So I'm excited to see what comes out of this. And I agree. I want to see the final terms. I don't think they're going to change all that much. I think 8% is the market pricing. People I've talked to thought that it should have been a lot higher than 8%. I was hearing a lot of double-digit estimates from a lot of people, but I think 8% was enough to make this a really, really enticing offering. So I don't know. I like it. We'll see what how the market digests it overall, and I'm still going to spend some time modeling out some scenarios on whether they used one or used another and what the end result is here. But my initial feeling is this is a really good move, and it's going to provide them a huge amount of optionality moving into the future. And if it does release some reliance, like I don't think it's getting rid of converts, because I think that's a great product that they've got a specific pool of capital that always wants to buy it, but it might lower the amount over time. And in the event that they do that, you start reducing any of that point in time maturity risk. So I don't know. I think it's good. That's my read on it, but we'll see what comes. I got a lot of different feelings in my feed this morning. So, people were all over, like it was over. This was the worst thing that ever happened. Some people liked it. I don't know where everyone's going to land on this ultimately, but I think that we got to run through a cycle of this where people see the impact to all the metrics and how accretive this actually is, and model out, like 8% sounds like the end of the world right now, but it's not.
It's not.
Not when you look at the liquidity of the common stock here. It's small for right now. It is, right. Maybe it gets really huge and then people start getting concerned, but either way, if you use an ATM on the preferred, you're still getting massive accretion to your key metrics, and you get to defer the issuance of your common stock, and you have to issue way less of it per dollar of capital raised. It's still a major win. So I think in the end, people are going to end up liking it, but I think it's going to take a lot of time for people to digest the offering.
So one other thing I wanted to hit on that is if the new political regime does no capital gains tax on crypto, then there could be a situation where MicroStrategy is more flexible to go in and out of Bitcoin to use Bitcoin to pay dividends as needed, if needed, without having to incur a capital gains tax from, having significant holdings that are in a really positive position. See how that goes.
Yeah, I mean, it could. Right now in the prospectus, they can pay it out in common stock or in cash, right? Those are their two options for paying the dividend. They can pay it in Class A, but the reality is they'll pay it in cash, right? If they pay it in cash, that gives them the ability to pick when they sell the common stock, right? Otherwise, you're just at whatever the date is, and you got to issue the common stock as the payment for the dividend. But if they control it, they can raise the cash during any period of time that they want. So if you get some major blow off, they can raise the cash that they need to pay the dividends, and they can do it with far fewer shares than if they waited and just had to issue the shares as the dividend. So it gives them optionality in case they absolutely had to. But keep in mind that this first round, right, $250 million, $20 million a year in dividends, quite frankly, that's probably within their cash flow now. I know Q3 looked bad, but there was all kinds of one-time stuff in Q3. But
yeah,
typically it's 60 to 75 million in free cash flow, and this one's going to cost them 20. So even if they double it, costs them 40, and they got about a little over 30 on the converts right now if nothing else converts. So there's plenty of space there right now. So this one shouldn't really be a worry.
And the dividends pay out 4 times a year, quarterly.
Yep.
So it's almost like you can anticipate or expect like one move up once a quarter. But I mean, even then, it doesn't take many shares to raise $20 million in capital. They just raised $18 billion in 50 days. So you put the scale of 20 million relative to 18 billion, it's nothing.
Yeah. So now imagine all they need
quintuple the size of that, and it's still nothing. Yeah.
So imagine all they need that ATM for is just to pay the dividends. Well, look at how small those dollars are so far. 20 million a year, right? I mean,
nobody would notice,
maybe, but, and I'm not saying this is what they're going to do, right? This is just an idea, but it seems like an idea that makes a whole lot of sense if they get the liquidity in the preferred market as well. If these things are pretty liquid in trading, then I don't see any reason why you wouldn't use that type of a structure and take advantage of the more accretive vehicle, right? So, that's kind of my view on where these go, which is what got me pretty excited about them. Because I thought it's not just a preferred offering that's carrying a dividend that's now a cash strain. That's not the point, right? The point is the massively accretive nature of the capital that they're raising. It's going to allow them to get a huge amount of Bitcoin very accretively. Bitcoin per share is going to go way up. And they can easily fund the dividend payments. And if that means selling equity, fine, because equity is the product right now. And they're going to have to sell way, way, way less of it.
Yeah, right.
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 $1 billion in 1 year would fund the dividends for several years, right? Like it doesn't take very much. So you might see a massive slowdown in common stock dilution. And, I know everyone understands, you raise $1 billion, but you get $1 billion of Bitcoin that goes onto the balance sheet, right? Like it's a transfer, but now you're raising, $3 billion, right? So I think it's really good. So there's my rant, but they're winning me over. I like it a lot.
Just on that math, right? Like if the dividend is $20 million a year, MicroStrategy raised 18. Hold on. Where's it at? They raised $19.3 billion in the last 50 days. And the quarterly dividend would be $5 million. So they could effectively run 3,868 quarters of that $5 million dividend.
Yeah, just look, if they raise
that they raised in the 50 days.
Yeah, if they raise $10 billion with preferred, that would be $800 million a year for dividends, right? That would be a light week right now.
Yeah.
Right. I mean, everyone will make noise about it, but that's a pretty light week right now. And the amount of Bitcoin that they get to buy doing that is absolutely insane.
Oh, bonkers. So, again, the bears are going to be they're going to hate this so much.
Oh, people are going to hate this. But I don't think anyone's going to really think all that deeply about it, right? I mean, that's usually what you experience is people have a knee-jerk reaction, and that's what they stick with. And I'm starting to really like that because, I want, like I said, I want two camps. I only want two camps. I want one camp that thinks they're totally insolvent. This is a Ponzi and it should be priced at zero. And I want the people that think that this thing has no ceiling. That is the range I want on this equity, because that's going to keep creating that volatility. And people are going to scream every time we get these drawdowns. It keeps happening. We went through 4 of these last year. Like, this is not out of the normal, but every time it happens, I know that I understand people getting frustrated, right? That's fine. No one likes to be down money. I don't love being down money, but like you'd think we've seen this enough times now where you might go, maybe there's a pattern here, right? And maybe, every other time everyone said it was over and this was it and the strategy wouldn't work anymore and who would touch this thing? And then it comes right back, right? So I don't even sweat it. And I think that this is such a big change that it's going to really, once people figure out what's happening here, potentially, right? Maybe that's not what happens at all. And, then we'll see. Then everyone can yell at me, I guess. But, like if that is kind of the future mission here, what an awesome strategy, right? I like it. I think it's going to be great. So
it's like the opposite of a stock buyback.
Sure.
It's like the complete opposite. And people are going to say like, oh, you shouldn't be allowed to do this. And it's like, well, if you're not allowed to do this, like stock buyback should be legal. It's like that. That's going to be the narrative, right? Like I guarantee you the bears are going to say this should be illegal, right? That's what's going to happen. And then the argument back to that is stock buyback should be illegal. It's the same fucking thing.
Well, you're going to have to tell me what the bears are saying. Cause now that I'm out of all the groups now, I'm just out here in no man's land in my peaceful Twitter feed. I don't get nearly the hysteria anymore. It's beautiful. So I'm not even going to know if it's happening. So
yeah, that's fair. That's fair. Man, maybe I should do that. Just drop the groups. Oh my God.
Someone's got to be in there to report back, but it just couldn't be me.
Yeah.
It's taken way too much time to fight with strangers on the internet.
Yeah, I just don't fight.
I love your input there, Ben. Especially, I think a question that I and many others had is like, how are they gonna fund the dividend? And you made it very clear that that's gonna be easy peasy, lemon squeezy, selling some ATM or whatever. And even the
Well,
fact
they
that they
say
can
it right
do
in the
ATM.
prospectus, right? That's not me speculating on that. They've got it written down. So they're going to use the ATM to fund it if they need to. And people have to do the math to decide whether they're okay with that. And if they're not, then you move on.
Short it, please.
Short it.
Short it.
Yeah,
Well,
short it.
yeah, maybe it's over, right? Maybe this is the
Short it.
best time to short this stock, right? You know, maybe that they should consider that. I don't know, but
We've got an earnings. So we got a Fed meeting in 2 days. We've got an earnings call in like 8 days. We've got some more excitement. I mean, God, every day it's like feels like a week, you know. It's crazy.
yeah, there's a lot.
Jeff,
coming up.
I know your time is maybe more limited. If there's anything that you want to touch upon before you have to go, then now's of course a good time. Otherwise, I do have another point that I'd love to hear you guys' opinion on. So it's up to you, Jeff, if you got something that is important to share.
No, I really hit on that. Is yeah, I think SAB 121 or SAB 122, banks being able to custody Bitcoin. Actually, the one thing I did want to hit on that because somebody brought it up, rehypothecation. I think the market should demand a rating agency or some sort of rating framework for any sort of banking institution that's custodying Bitcoin, because all of the Bitcoin that is moved can be audited on chain, and I think it could be really valuable for the market to demand these types of things and to set them up. So I think there's going to be some progress on that front in the near future. And if you don't want the banks to rehypothecate the Bitcoin, the market needs to demand standards, and there needs to be a framework for what that looks like, or else they're going to do it. And if the market starts to demand a framework for it and a rating agency or some sort of rules and regs, there are institutions that would stand out, right? Like, let's just say Unchained Capital has, is 1-to-1 collateralized or over collateralized based on their Bitcoin that they have and what's lent out. And you would be more incentivized to use an A-rated, sketchy entity like Unchained, as opposed to some other entity like, I don't know, JP Morgan, if they're nefarious with their Bitcoin holdings. So just something to think about on the horizon is that will be a discussion for the next 4 years, is fractional reserve banking with Bitcoin and how that's managed. So just something to keep an eye on.
For sure. All right. I want to touch on this point as well and see what you guys think. I like to look at MicroStrategy. I mean, not only all these aspects, which are super interesting, and we're watching financial history unfold, and it's the biggest thing ever, but also looking at it as an investor in terms of they outperform Bitcoin. For how long can they continue to do that, and what does that whole thing look like? Trying to make the decision, is this a good investment or not? And I clearly think that it is a good investment, and that's not financial advice. But when Dan and Tim were on MicroStrategy Monday last Monday, and I did some napkin math showing that the last 12 months approximately, when Bitcoin had done 2.5x, MicroStrategy had done 8.5x. And that doesn't mean that that's always going to be the case naturally. But when you look at the compound interest of that difference, when you play it out over time, I think it is reasonable to expect Bitcoin to do 200x from now, which would take Bitcoin to $20 million per Bitcoin. And that is, I'm not saying that that's the end game. That would be bearish to say Bitcoin only goes to 20 million, but 200x is reasonable. If MicroStrategy keeps outperforming, which I expect it will, then it's not unreasonable actually to say that MicroStrategy might do 2000x and even reach $1 million per stock. And don't shoot me down just yet. But then I looked at, well, what would that take for that to happen? And that means that if MicroStrategy is to do 10x more than Bitcoin, well, then they would also kind of have to accumulate 10x more Bitcoin than what they have now, which then would, and I love that you guys on MSTR True North last Wednesday, a must watch every Wednesday evening. We're talking about how many Bitcoin you believe MicroStrategy could accumulate by the end of this year. I in the chat I wrote a million is my best guess, and if MicroStrategy can reach 1 million Bitcoin this year, it's above 0% probability that they could also reach 10x of what they have now. Now that's a lot. That's 4 to 5 million Bitcoin. But that's how it's operating, right? It is an outperformance of Bitcoin because of the accretion, because of the buying more Bitcoin per stock, more sats per stock. And what it kind of tells me is that I think that is likely, and that's why I think that MicroStrategy is undervalued at 980,000 Bitcoin in market cap currently, as we spoke about in the beginning, Jeff. Granted, as you actually pointed out last Wednesday, that doesn't all go to the current stockholders. It's maybe 60% and then 40% to the new. If you remember, you were doing that. I might be putting the wrong words on now to trigger your memory on that. But bottom line is, in my opinion, it's realistic, and it might be what actually is, if they buy that much Bitcoin over the next, say, two, 3 cycles, that could be a big reason that we get the end game of hyper Bitcoinization, because someone taking 4 or 5 million Bitcoin off the market is likely pushing the price over the edge and collapsing fiat. That was a long spiel, but your thoughts on that, gentlemen, if you have time.
Yeah, I mean, there's a lot going on there. There are so many questions that will come into play on the road to that journey, right? Going from, again, speculating 1 million to 4 million Bitcoin. The real question is, what is the utility of value of Bitcoin? How does that develop and expand over time? Does the utility of holding Bitcoin increase over time? And if so, who are the new players that are coming into the space to buy Bitcoin? This is where the acceleration of the game theory also comes into play. And how many corporations are buying? How much are they buying? How are they buying? Who are they buying for? Are nations buying? Why are they buying? What can you do with it? Can you hold it long term? Is this there's a lot of work needs to be done, I think, in that amount of time frame, in order to even conceptualize the power of that. Yeah, I mean, it's possible, but there's a lot of work that needs to be done, or else the market is going to not allow it. I think them to get to that point. Maybe, who knows? I don't know, Ben. It's a fun thought experiment.
I live my life $250,000 at a time, guys. A lot of people know that movie quote, but yeah, I mean, there's a lot of things that could happen here way off into the future. I try to keep us focused on what I think is coming in the next 12 months personally, and I take it from there, because every time I've thought something was going to happen, they surprised me and made me look incredibly bearish. And even when we were all predicting how much Bitcoin we thought MicroStrategy would get to, I'm the most bearish prediction so far, I think. Because I said that my best guess is that they probably get somewhere in the mid 200,000s of Bitcoin this year. It gets harder to keep accumulating the Bitcoin, right? Because it's going to keep driving that price up higher and higher. And so when you look at the amount that they've got left on the 21-21 plan, you could say that preferred maybe accelerates it, but I'm not sure yet, not this year, because you do have that period of time where you need to prove out the volume on the preferreds before you could even do something like get an ATM going on it and keep raising capital that goes in as equity, which frees up leverage. And so, they're starting smaller than we anticipated. So it doesn't create quite as much leverage room on the other side of this. So now we're probably back to having, this, and then maybe $2-3 billion convertibles coming up here in the short term. And then you look at the remainder of that 21-21 plan, and, the convertible issuance is totally predicated on the leverage, right? We can't start changing our mind and saying that, no, they're just going to issue convertibles whenever they want, because there's a risk management structure here, right? That's why this works, is because they're not getting out over their skis in terms of the risk curve. They're not introducing all these different maturity risks into their business. They're making sure that the amount of debt that they take on is manageable with the amount of assets that they're holding. So everyone that thinks everything moves at warp speed, that's not the view that I have of this. I view it as being very, very calculated. And I like that. I don't want them to start getting reckless and just taking on debt at all costs just to buy Bitcoin. It's not what I want them to do. I want them to be very measured in how they're engineering this and how they're creating the equity and the volatility in the equity. I want that to stay methodical. So I'm not rooting for, get to 1 million at all costs this year. I don't care if they get there. I think my number was 650,000, something like that. And that would be awesome. That's a huge amount of Bitcoin when you figure out how much capital it takes to get that. If Bitcoin does anything from this point moving forward over the next couple of months. So I try to stay out of the really high end predictions here, because it's just not the message I want people to hold on to, because all you can do is be disappointed then, right? If everyone's thinking that there's going to be $1 million or 1 million Bitcoin accumulated this year and they only get to 700, people are going to think that's a colossal failure because they, were short 300,000 Bitcoin, right? But if you break down the plan they have out, and they've pretty much committed saying, we're going to try to work through this plan before we establish a new one. That means that they've got $18 billion worth of fixed income instruments to get out the door. They might get 10 out in Q1. That would be pretty fast to get 10 billion out in Q1. They've got 4.5 left on the ATM for the common stock. So that's going to take some time to get through all the fixed income side of this. My guess is they're through it by Q3, maybe, hopefully, maybe a little sooner if Bitcoin takes off and helps them and creates that leverage capacity there. But my guess is by Q3, they're done. And then in Q4, we're probably back to picking up a new plan. And now they'll be using several different tools, and we'll see what else they got, right? They've still got one product on there with an asterisk next to it that hasn't been issued. And so we'll see if they end up doing eventually a fixed income product with no convertibility to it. And we'll see what that looks like. So that's why when I'm talking about my forecast, I'm on the bearish side of the forecast, which I still think is wildly bullish. But I just think that the economics get harder to accumulate more and more Bitcoin. And I don't know that upsets me, right? I don't know that I'm rooting for MicroStrategy to have 5 million Bitcoin, right? I think that would be really, really hard to get to. So, when I'm watching them progress here towards 1 million, I think if that takes them a couple of years here, that's not the worst outcome. I think that would be still a very aggressive accumulation of Bitcoin for a while. So, I'm probably killing the bull fuel on this one, but I just try to make sure that it stays as reasonable as I can make it, because I'm investing based on the things that I'm thinking. So I've got to try to do the realistic scenario here for what they're accumulating. Now, I'm not saying that makes the stock price boring, because it's definitely not going to, right? I mean, I think this is going to blow a lot of people's minds here when it gets really rolling again. But, that's my view on the accumulation. So I'm looking for Bitcoin to get to 250,000. And once it gets there, then we can talk about it going to 1 million and beyond. But we got to break down the barriers in front of us first.
I think I think the real game changer is like being in strength in a potential bear market. And to Ben's point, managing that leverage is just so incredibly important, because I mean, if they're in a position to be able to step on the gas when there's a quote unquote bear market, that's gonna rip people's faces off.
Well, here's some math, right? So if they've got, call it that's not right. So if they've got 18 billion left on the ATM, they got 4.5 billion or 4.5 on the ATM, 18 on the fixed income. So if they buy all that at an average of, call it 150, that's 150,000 Bitcoin, right? So that's why I try to say, like, realistically, maybe we don't make a million the target, right? Maybe we bring that down a little bit and let them surprise to the upside if they need to. But I think 1 million's a really tough target. So we'll see. They've proven me wrong. I made a prediction in Q4 last year about where I thought that they were going to get to, and Then I needed to post the meme that says, "Am I a joke to you?" Because I posted it and like 2 weeks later they were blowing past it. It just made me look silly. So it could be the same scenario. Maybe I'm the good luck charm there. So everyone should be excited if I'm predicting bearish things.
Yeah. So I want to respect you guys' time because I know you're pretty much you guys have to go. So yeah, Jeff and Ben, thank you so much for coming on MicroStrategy Mondays and enlightening all of us. Love to hear all of it. The preferred stock and all the different topics we cover. Thank you so much, and thank you to everyone watching. If you liked it, you can hit like and subscribe on the YouTube channel, etc. And stay tuned. I want to continue to pump out good MicroStrategy content every Monday. And also do watch these guys on Wednesdays with MSGR True North and an amazing group of MicroStrategy investors there. And I believe it's 7 p.m. PST that is coming out of Jeff your X account and on the Quant Bros YouTube channel. Also, so I watch that. I watch MicroStrategy Today on YouTube every day and MicroStrategy Daily. All good content. So thank you very much, guys. Thank you all viewers and listeners. Have a great Monday evening.
You bet. See you guys.
Take it easy. See ya.
Cheers.